Good morning. This is Niaga AWANI. We start off with, of course, the local bourse. The KLCI index is up by 0.42 points at 1556. This is marginally up at 0.03%. We're looking at open trading valued at around 170 million ringgit with over 353 million shares traded. Losses are leading the gainers at 287 loss and about 182 counters making a positive start. We're also looking at some of the stocks that would be of interest to you. Serba Dynamic was last traded at 8 cent. Like yesterday, it went as low as 4 or 3.5 cents. So the massive sell-off is actually happening. Nothing much is happening. Nothing much else is happening there. Some stocks that we can look at, including that of CIMB, it's up at 5 ringgit 11 cent. And one company that just posted its earnings is Hartalega, posting its first quarterly loss ever. Because of the Cukai Makmur, they are down at 4 ringgit 34 cent. But of course, we continue our coverage on the OPR. This is because Bank Negara's Malaysia's Monetary Policy Committee, or MPC, as you have realized, increased the OPR rate yesterday by 25 basis points. My colleague Ashraf Hasnan, as well as Najib Arif, has covered it with our analyst just now, Zanizam. And the point of interest then in that conversation is, of course, on how it impacted the individual itself, you, yourself, watching at home. However, we want to talk about how this is going to be impacting the investment community. Now, this OPR is raised after taking into account that the sustained reopening of global economy and improvement in labour markets continue to support the recovery of economic activity from the impact of the COVID-19 driven movement restrictions. Now, joining us to understand this a little bit better is Izzat Fadli, the country director of Wahid Invest Malaysia. Good morning, Izzat. Let's do a quick take into what your initial reactions would be following this rate hike.
Sure. So the early rate hike was a surprise move by Bank Negara Malaysia, but it was not a huge surprise. In the recent Reuters poll, 4 out of 18 economists did predict a rate hike as early as yesterday due to concerns that widening interest rate differential with the US Federal Reserve and some regional peers may worsen ringgit's performance and subsequently drive inflation higher. So the decision to increase interest rate yesterday was a preemptive move by the Bank Negara Malaysia to be ahead of the curve and prevent further inflationary pressures. So currently the headline inflation for Malaysia is at 2.2%. And we are still seeing an upside risk coming from the rise in commodity prices, strained supply chains, as well as strong demand conditions, particularly in the US.
Yeah, it's interesting that you point out the commodity prices. Quick news on that, because The Edge reported that Indonesia's flip-flop does give Malaysia an advantage in top of the palm oil market in India. But commodities aside, I want to look at how investors are behaving in this. My question, of course, is on how investors, whether or not they've priced in the hike, and how will they move ahead in the next quarter?
We think investors have partly priced in the early hike by BNM, given the fact that the Federal Reserve, the decision by the Federal Reserve to raise interest rates in April did move the regional stock markets lower, with the expectation for other central banks to follow suit heightened. But yesterday, we saw selected sectors such as financials closing higher, suggesting that BNM's decision to hike interest rates still had an impact on the local market.
The expectation, of course, is on how regional markets are going to behave moving forward, not because of the OPR, but generally speaking, central banks around the world, from the US Fed all the way to BOE, have raised their interest rates in tandem. What would be expected then, is that from the markets following this hike? And do you think that this is a good measure, in a way, to control inflation?
So naturally, an early hike like this, some sectors will benefit from a higher interest rate environment. So you'll see financial sector is expected to trend higher on expectation of higher net interest margin. We are also currently seeing sustained commodity rally driven by geopolitical concerns that is expected to continue to support inflow into the plantation sector. But overall, I think the local as well as the regional markets are still expected to take cue from future monetary policy decisions by the Federal Reserve. And we are still seeing other downside risks that include foreign outflow from the local stock and bond markets, as well as weaker than expected Malaysian economy and macro data, as well as any disappointment in company earnings going forward.